Edge is one of the most diversified e-commerce companies in the country right now and available in the public market and among the very few that are profitable. To discuss the different engines of growth for this company and to get a sense of the Indian e-commerce industry as a whole, let's welcome in this morning Hitesh Oberoi, Managing Director and CEO at Edge. So Hitesh, this morning you cover for us Roti, Shadi and what is the third thing I said? Makan, right? Yeah. We're going to do coffee with CCL in about 15 minutes from now after we're done with you. Good morning. I think a very quick, simple, general question before you get started on. What is the business environment looking like right now, especially for Naukri.com? The job situation has been very good this year, and we've seen that the last 2 quarters have not been necessarily as encouraging as one would have liked them to be. What's your outlook at this point in time?
Well, you're absolutely right. Business was impacted in Q1. One, because of the IT slowdown, and two, because of course, demonetisation, which had some impact, and then, of course, GST as well. We saw a mild recovery in Q2. Business in Q2 was better than Q1. But still, it was impacted to some extent, and this was also sort of reflected in the GDP numbers. GDP growth, as you know, was slower. It was lower in Q2. We are hopeful that the second half of the year will be better, but it's still very early. We get a lot of our payments and a lot of our renewals at quarter end, so we'll know only in December. But yes, overall, there is less noise in the market. There is less sort of discontent from what I can anecdotally hear from our sales team. So things should get better in the second half, but time will tell.
Yeah, I have one more question related to jobs, Hitesh, and Naukri.com, and that is that, we've seen a lot of companies come talk to us about the impact of demonetisation and GST on the macro economy, but more specifically on the informal sector and what it's meant for small businesses. The flip side of that is we've seen, people like team leads tell us that the formalization process is good for jobs. Are you seeing that play out at all on Naukri.com, that those small businesses that have not been able to survive the twin onslaughts of demon and GST, you're seeing more people move out from there and try to find opportunities in the formal sector?
Actually, we've been operating in the white collar market, job market, and most of our clients, at least most of our large clients, are large companies. Of course, we work with 70,000 companies and, of all types. But the smaller companies are a very small part of our business. They don't contribute a large sort of portion of our revenue. We saw a slowdown in the SME space as far as our business is concerned. We've seen a slowdown for the last 4 quarters now. But it's very early to say whether that is going to lead to formalization of the economy and whether hiring at big companies is going to look up as a result. That is not very clear to us as yet, at least till now.
And okay, having said that, if you look at, Hitesh, good morning, this is Niraj here. If you look at across brokerage notes as well, everybody's citing one thing, and that's the danger of job losses in smaller firms as a result of GST execution implementation. All of that put together, a 12-month scenario, is there earnings visibility in Naukri for you as a company?
Well, what we've seen in the past is that our growth is linked to GDP growth. So, we are basically, our sort of growth is linked to the number of, to the amount of gross hiring in the economy. If I were to take one number, and the amount of gross hiring in the economy depends on, one, attrition rates at companies, and two, the net hiring sort of outlook of companies. Now, in the past, what we've always seen is that whenever GDP growth sort of starts looking up, attrition rates go up in most companies, and therefore sort of gross hiring numbers go up. Now, on top of that, if companies start investing aggressively in new projects, they need to sort of up their net hiring as well. So, a lot will depend on what happens with GDP growth. The only sector which we are dependent on and which is not really indexed to GDP growth is IT services companies. They saw a slowdown in the first half of this year. Hopefully, the worst is over there as well, and things should look up even for IT services companies going forward. What I said earlier was that we get a very small proportion of our business from small and medium enterprises. Yes, we saw a slowdown as far as SME hiring is concerned, but whether that will translate into more hiring with the larger companies, only time will tell.
Any numbers you can provide us, Hitesh? I understand it's a very small part of your business, but I'm just using it as a macro indicator as well. On the slowdown in the SME part of the business, any material numbers or meaningful numbers that you can provide us?
Well, we don't track the SME segment. I mean, we track customers, and we have sort of different channels which sell to different segments. And for example, our telesales channel is very sort of, they sell aggressively and actively to the small and medium enterprises. That segment was growing at maybe 20% per year for us till about a year back. I think for the last 3 or 4 quarters, we may have sort of grown at only 8 to 10% as far as that segment is concerned. So it's still growing, but it's just that growth has slowed down, even for SMEs. Sectorally, what I can tell you is that there are certain sectors which are doing very well, like the banking and financial services space, the hospitality space, the travel and tourism space, the healthcare space, teaching jobs. These jobs are going through the roof. Certain sectors are in trouble and have been in trouble for a while, like sectors like telecom, sectors like construction, sectors like real estate, sectors like infrastructure. These continue to sort of, we're not seeing any job growth in these sectors.
So can you say with any degree of certainty that by Q4 things will look substantially better? Any numbers you can put to that in any fashion that gives us a sense of what kind of improvement you expect over the next 2 quarters, or if not over the next 2 quarters, and that's too short a period of time, then over the next 4 quarters?
Well, I can't forecast, I can't give you sort of, I have no idea what is going to happen in the future. But at least what I can tell you for sure is that demonetization, the impact of demonetization is largely behind us. The worst is over as far as the IT slowdown is concerned. And even GST, the impact of GST will slowly sort of fade away. So these are the 3 sort of big things which impacted hiring and at companies for the last 3 or 4 quarters, and they should be largely behind us. Now, whether things will start looking up from here on or not, how much they will look up, whether GDP growth will go to 7% or 8%, it's hard for me to say.
Okay, I'll come back to Naukri, and I'm sure Niraj will have some questions as well. But I also want to put in a question on some of the other businesses that you have. 99 Acres, Zomato. Zomato just launched Zomato Gold in India. Yeah. How are these businesses faring for you? Where do you see the maximum strength or opportunity at this point in time, especially when it comes to contributing to your financials?
Yeah, so now we are sort of bullish on real estate. We were not so bullish till some time back. In fact, the last 2 or 3 years have been very, very bad for the real estate sector. Transactions have hit an all-time low. Prices are down. New launches were impacted. The second half of last year was a disaster because of demonetization as far as real estate is concerned. Even the first half of this year was impacted because of the uncertainty around RERA, the new real estate regulation. It appears now that the worst is behind us and things are sort of slowly getting better. There are segments like affordable housing, the mid-income market. These segments are beginning to look up. There are some launches which are now sort of companies with builders and developers who are launching new projects once again. Yes, a large number of the developers and builders continue to be in trouble. But there are green shoots here as far as this business is concerned. We are confident that the second half of this year will be much better for real estate than the second half of last year as far as we are concerned. So things are looking up in the real estate space for us at least. Of course, the government is also helping because they're subsidizing affordable housing, and a lot of the launches we're expecting going forward will be in this space. So on the whole, we are happy with the progress we're making in real estate. The matrimony sector for us, Jeevan Sathi, we've had a very good last 8 quarters now. We are the fastest growing matrimonial site. We are growing at 25% per annum, and we've been growing at 25% for the last 2 years. The sector is growing at 8-9% per annum. We are gaining market share. So we are happy with the progress we're making in matrimony. And of course, the fourth business we run inside the company is Shiksha, which is the education business. It's a small business, growing well, it's breaking even, and we have plans for that business as well. So on the whole, the business outlook for us, it has sort of, I would say, is a little better than what it was maybe 6 months ago.
And what about some of the other investments that you have, like Zomato, Policy Bazaar? I know they're much smaller in respect to your main business, but what's the outlook on any of these? Any sort of shining spots in this that work well for you over the next couple of quarters?
Actually, so they're not that small anymore. In fact, Zomato and Policy Bazaar are both reasonably big companies now. It's just that we own a small proportion. We don't own them 100% and we don't run them. Policy Bazaar has been actually on a tear for the last few quarters now. They're growing very rapidly. They're breaking even in many of the spaces they operate. The Policy Bazaar business is I think, on a tear, and they're a clear leader, very, very dominant in that segment. Even Paisa Bazaar is doing very well for them. And in general, the financial services and you know, the BFSI space is looking up, and it's a good time for them, I think. As far as Zomato is concerned, Zomato's had a turnaround. I mean, they were sort of losing a lot of money till about a year ago. They've been breaking even now, or close to breaking even, for the last 3 or 4 quarters. They've aggressively expanded to food ordering. They're now looking to sort of expand into the delivery business as well. So you know, things are looking up for many of these companies, and I think the future will be better.
How better? I mean, I'm just trying to wonder. One, in 99 acres, is the lack of, or the reduction in competitive intensity, not having too many major competitors now, aside of maybe Magic Bricks, does that help? And if you can put some indicative numbers that I understand you can't put numbers for Naukri because you mentioned it's difficult to forecast GDP, but what about 99 acres? What about Zomato? Because that's probably been that one big winner for you over the last 12 months.
Yeah, so see, 99 acres, you're absolutely right. Competitive intensity has come down, but it is also because the space was in very bad shape. I mean, like I said, there was no business to be done. Many of our clients were going out of business. Transactions were at an all-time low. People had stopped buying houses. Interest rates were high. So the overall sector and deliveries had sort of taken a beating. I mean, there are projects that have been delayed for five years. So the confidence in the sector was low, but thanks to RERA, thanks to interest rate subsidies being given by the government, thanks to the boost to affordable housing, thanks to the fact that prices have sort of corrected over the last 2, 3, 4 years, and real estate is therefore more affordable, I think the sector is going to look up going forward. And for us, you know, the second half of last year was a disaster. So, you know, we look at YOY growth, and the second half of last year, I remember post demonetisation, our traffic fell by 40% overnight. So we saw sort of our business actually declined in Q3, and we barely sort of reported any growth in Q4. So given that our base is low, you know, we expect this year to be a lot better than last year as far as 99 acres is concerned from a top line standpoint. Of course, bottom line will depend on how much we invest in the business, and we are confident, and we will aggressively sort of keep investing in this space. You may have noticed our ads on TV. We are sort of bullish. As far as Zomato is concerned, you know, they've seen a turnaround. So they were sort of, there was a point in time when they were losing $5-6 million a month. And I think for the last 2 or 3 quarters, they may have lost a total of maybe $2 or $3 million in total across 2 or 3 quarters. I think they're at a stage where if they want, they can break even, especially on the advertising business. But they have to figure out what to do on the delivery side. Of course, there is competition from the likes of Swiggy, but they're also a strong player in that space, and they need to sort of keep investing aggressively to sort of maintain their dominance and maintain their leadership. So you know, I think it's a strategic call which they will have to take now on on how much they want to invest. If they invest aggressively, of course, they will go into a loss for some time once again. But I think top line will grow aggressively even at Zomato.
Right. Hitesh, if I can just ask in, I mean, what is the market pricing in right now? Because there has been an exceptional move in your stock price. I'm not asking you to comment on that, but is the market pricing in at least what you did in the first half to be reenacted in the second half, which would be a 10-12% top line growth, maybe about a 15-18% bottom line growth for the year and for the next year as well? Do you think that's a possibility?
Well, I have no idea how markets work. What I can tell you and what I've seen over the last 15 years, that markets show you all prices. Okay, right? So but just 3 years ago we were trading at maybe 290 rupees, 300 rupees, 350 rupees. Today we are trading at 1250 rupees. It's not as if too much has changed. It's just that, of course, we've executed well in some of the businesses we are in. We have maintained and consolidated our leadership, and the outlook for the economy maybe is a little better than what it was a year ago. And of course, businesses like Zomato have turned around. So, we are seen as a sum of parts story by investors. They ascribe a value to Naukri. Naukri, did an EBITDA of 320-330 crores last year, growing at 15-20%. So they sort of give some value to Naukri, basis the EBITDA Naukri generates. Then they sort of 99 acres, they give a value to our leadership, they give a value to the fact that it's a large sector, potentially larger than jobs in the long run, and therefore if you are a leader in that category, that business will be worth a lot. So that business, normally they value on top line, on a top line multiple. And then, of course, they give value to Zomato because Zomato is a private company, and people have been investing in Zomato. So there is a valuation which is given to Zomato, and we own a large chunk of Zomato, so we get credit for that. And of course, we have 1,500 crores of cash also on the balance sheet. So add the four, and that's what sort of how they arrive at the valuation. Now, whether the valuation stock price should be 1,200 or 1,100 or 900 or 1,500, who knows?
Hitesh, we're not asking you to predict what your stock price will be, but a rising stock price is also a good M&A currency. My last question to you is less operational and more strategic. Where does the next big leap come from you? You've explained to us what the near-term outlook is for many of your key businesses, some of your key investments. Where does the next big leap come from you? Does it come from any kind of consolidation in the e-commerce space? Does it just come from organically waiting for this market to grow at a faster pace? How does it work?
Yeah, so organic growth should be good. I mean, going forward, like I said, our matrimonial business and real estate business should grow faster. Even at Naukri, if the economy looks up, growth should pick up going forward. There is an opportunity to consolidate in the matrimony space right now, but only time will tell whether that works out or not. There are three players, and
considering some options.
The truth is that if you have a market which is split between three players, it's very hard.
Are you actively considering?
Well, there are just three players in the market. One just went public. Well, we've been actively considering doing something in the matrimony space for about 10 years now, but we have to get the right opportunity.
Okay.
But what I'm saying is the things have changed because one of the players has gone public and is making money. And at some point in time, if we have to create value in this market, we all know, that how it works in the internet. It's a winner-take-all space. You have to become a leader to sort of make any money. Otherwise, it's very hard. So the market is right, but only time will tell if there is going to be consolidation of any sort.
All right, Hitesh, lovely having you this morning on BloombergQuint. Thanks very much for joining us. And the key takeaway from everything that you've told us, operationally and strategically, is that there are fewer jobs in the economy. People aren't quite necessarily buying houses, but they are getting married and they're eating food. So with that, we're going to wrap it up with you. Thanks very much.